Welcome, everyone. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journey, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome to another exciting episode of the What Matters podcast, where we delve into meaningful conversations with industry leaders. I'm Mike Mershazadeh.
And I'm Ashley Ward.
And today we're thrilled to have Brian Cooke and Chris Cooke, managing partners of Cooke Financial Group based in Indianapolis, Indiana, joining us. Thank you.
Glad to be with you.
Yeah, thanks, Mike. Thanks, Ashley. It's nice to be here.
Brian and Chris have been an integral part of the evolution of the firm from their introduction in 1992 to the 2016 merger that launched Sanctuary Wealth, now one of the fastest growing hybrid RIAs in the country. Cooke Financial Group became the integral team on Sanctuary's exclusive partnered independence platform, with Chris and Brian as the Sanctuary founders. It's fantastic to have you with us today.
We're excited to tell the story. It's a fun story.
Yeah, thanks for having us on. You guys are creating a great little podcast here.
Thank you.
Well,
I was going to say, we're really looking forward to hearing the Sanctuary story. So, Ashley, I'll let you dive into everything there.
Yeah, let's dive right in. Well, both of you have had very impressive journeys with over 30 years of industry experience. I'm going to start by exploring the origins of Cooke Financial Group. Brian and Chris, could you share the story behind founding Cooke Financial Group and how it's evolved over the years?
How much time do you have? No. Chris, why don't you start? I'll add some color.
So our father, John Cooke, started Cooke Financial Group in 1969 when he left the Air Force after the Vietnam War. And he was a young guy with big ambitions. And he essentially said he wanted to own his own business, but he had no capital. And the only thing he could find was either brokerage or insurance. And he settled on brokerage with a little firm called Thompson McKinnon Securities. And Brian and I, of course, grew up in his household and watched him and my mother work very hard to grow the business. Dad had some very interesting successes along the way, but I would say some of his claims to fame and some of his leadership in the industry were he really pushed hard on separately managed accounts, probably in the 70s, way before this was a known quantity for retail wealth advisors. And then I remember vividly in the 90s, I can remember my dad pushing very hard on at this time, the Prudential Securities, which bought Thompson McKinnon, but pushing very hard on the Prudential Securities management team to incorporate no-load funds into our platforms, which became something called Pru Choice, which was the precursor to all of today's mutual fund
kind of
wrap programs. Yeah. So we've had a lot of fingers into the origins of the industry where we sit today, and watching our dad grow was a wonderful opportunity for us. We both joined Dad in 1992 when he was at Prudential Securities. Pru then merged with Wachovia and was subsequently bought by Wells Fargo. So we've had multiple names, but the Cooke Financial Group has never changed. And we often tease that we had one phone number for that whole time.
Yeah, we're very proud of we got 55 years of history now. It's crazy. Chris and I have been there 33 years apiece, and we have a great team surrounding us. I can't wait to describe it to you.
Well, if you could talk to us a little bit about that. You guys founded Sanctuary. Can you explain what the difference is with going underneath the name Cooke Financial Group, and is Sanctuary a separate entity?
Yeah, I think we can explain this very clearly to you. We spent probably a good 10-year period while we were at Wells Fargo from the middle 2000s through the 2016 date when we left, exploring alternatives. And we looked at, of course, the Hightowers and the Focus and the Dynasties and many of the alternatives that were in existence. And in each case, we found something that wasn't exactly to our liking. And so one of the key components of that was we wanted to own the Cooke Financial Group. We did not want to share ownership. We did not want the Cooke Financial Group to be folded into a larger entity. And so when we formed Sanctuary, we decided to keep the Cooke Financial Group separate and have a service level, which was at the origin. David A. Noyes was the broker-dealer we purchased, which we renamed Sanctuary Wealth. So the broker-dealer level and the RIA level provides services, But Cooke Financial Group is owned by Chris and Brian Cooke. If along the way we added the Smith Group, the Jones Group, and so on, and by the way, we're up to 88 groups, I think, today. All 88 groups own themselves. None of those groups are owned by Sanctuary Wealth. Now, there are some opportunities to sell a piece of yourself to Sanctuary Wealth, much the way a Focus Financial would have done it. But we formed Sanctuary so that the Cooke Financial Group could stay separate from the larger entity, but that larger entity could provide the services that the Cooke Financial Groups of the world need to run our business. We don't need a full-time compliance officer, but we sure need the services of a full-time compliance officer. We don't need a full-time accountant, but we sure need the services of an accountant. It sure is easier to go to custodians like Pershing, Fidelity, Schwab, whomever, and negotiate contracts when there's 88 of us instead of just one of us. Right. So all of these types of services become really valuable at the Sanctuary level, but we still own the Cooke Financial Group.
We coined the phrase partnered independence, and that's how we all feel. We're all partners. We all use the services of Sanctuary Wealth. We get together often as teams and collaborate, and it's been a wonderful experiment. I think when we originally thought of this idea, I'll give Chris a lot of credit. He was kind of the visionary of this. And when we went independent, we knew that was going to be exciting and entrepreneurial. And we thought maybe we could attract 4 or 5 other corner office teams to do what we did. We could partner our resources and go get cheaper custodian fees, maybe have better negotiations with our outside money management firms. But the experiment was so good that we're now up to 88 partner firms within about a 4-year period.
And growing rapidly.
And growing. So it's been a fun ride.
Wow. And I'm taking a look here under Cooke. The AUM seems to be around $3 billion, if I'm not mistaken.
A little shy of that. We're hoping to get there soon. If this market keeps going.
Well, what I say is that, whatever RIA database says, add about 25% to that, right?
If you looked at the aggregate of Sanctuary, I think we're just shy of 30 billion.
Yeah, that's what I was just going to ask you.
Partnered firms, yes. So we're a piece of that.
Wow.
And so, Chris, I believe you were more the visionary behind this idea, but both of you did this together. Was it just out of pure, motivation of seeing what you guys needed at your firm and thought other firms are probably struggling with these same challenges and we want to be there to help navigate them? Or
yeah, I'd say there are a number of things there. If you go back to the early 2000s time when we began this quest of saying where are we going to land on our, in our long-term planning, I always say there was a lowest common denominator problem at our previous wirehouse, and I think that's true of most of the big wirehouses. If you have 14, 15,000 financial advisors, you're setting policy for number 11,000. But there's somebody up here in the top 10 that's a big team. And, are you going to call them a team or are you going to call them a branch? I mean, when we were a big team in the 2000s, we were bigger than most of the branches in the Wells Fargo system. And yet the policies and procedures that applied to us weren't always effective for us. And so we had this frustration of feeling like a square peg in a round hole sometimes. And we wanted to have more freedom to operate the way we wanted to. As you can see from the logos behind us, we've been pretty good about branding ourselves with the Cooke Financial Group and now our bowl, which we've actually copyrighted, which was created by Brian's daughter, Anna. But it's this branding process. Sometimes it was embraced by the larger firm and sometimes the larger firm stood in the way of that. And we wanted the freedom and flexibility to really brand ourselves and tell our clients and our friends who we thought we were and who we wanted to be. And we've done that very, very well.
I think we also wanted the freedom and access to some boutique opportunities, maybe even in the local marketplace. There's a couple of wonderful apartment developers that would show Chris and I ideas. We might invest in them personally, but we weren't able to show those to our clients. And today, as independents, we can do our own due diligence and our own vetting and find opportunities in our own backyard that we think are good for maybe our families that might be great for some of our other high net worth families as well. So that's been eye opening, quite frankly, on access to local and boutique deals that the big wire houses they just didn't have access to or didn't want it because they were too small. Yeah.
I mean, sometimes somebody would say, hey, we've got a $50 million deal with a wonderful potential rate of return. Well, a $50 million deal, you couldn't even get a Wells Fargo or a Merrill Lynch or a Morgan Stanley to look at it. They don't have time. So those were just off the table. We also find that in doing some of this local boutique work, we create wonderful relationships with other leaders in our communities. And I think that's happening across all 88 sanctuary partner firms. So it's not the Cooke Financial Group generating a couple of boutique ideas. It's 88 different firms across the country generating boutique ideas. And we all get a chance to share in those. That's that partnered independence one more time. And it's a lot of fun, especially when you've met someone, you respect that someone, they're one of your other partner firms, and they come and say, hey, we've got a great friend with a great idea. I want to show it to you. It gives you a reason to look.
Very cool. And so do you both still play significant roles at Sanctuary, or have you taken a step back from that on the day-to-day basis? And now you're primarily focused on Cooke?
I think we are 90% plus focused on Cooke Financial Group. It is our baby. We own that. We take a lot of credit for launching Sanctuary Wealth, but we are so proud and so pleased to have a management team now who can really run that on a day-to-day basis and frankly do things that neither of us are capable of. We've found along the way, along this maybe 5 or 6 year path, some really wonderful people. And in fact, I might add that the original regional broker-dealer RIA that we took over, there are exactly 0 of the previous management people present at this time. We have replaced 100% of the original management team of that broker-dealer with our own people. And from Adam Malamet, our CEO, and Bob Walter, the president of our broker-dealer, and Vince Fertitta, one of the presidents, and so on, we have these magnificent, wonderful people with a vision and an excitement around independence. And I think that is infectious. And frankly, a lot of the success comes from like-minded people that get excited about opportunities in this independent marketplace. It's been a lot of fun.
I think most of the success in Sanctuary so far has been in the breakaway channel for those that wanted independence, that were living in the wirehouse world, that maybe felt like we did. We see an opportunity going forward that would be in the M&A channel, also in the independent channel, those that are just on their own that might want
a little more scale.
And so I think you'll see some fun things coming in the future too. So in terms of day-to-day operation, we have a great team that runs Sanctuary today. Chris and I used to both be on the board of Sanctuary Wealth. Neither of us are on the board today. It's a self-run entity, and we're still shareholders and want to see it succeed, obviously. But day to day,
I still serve as the chairman of the Sanctuary Leadership Advisory Board, which is essentially a group of our partner firms that have our own little community to give feedback and advice to the Sanctuary Wealth Board of Directors. So we keep a close contact that way.
Very cool.
Really cool.
And I'm curious, did either of you, were there any significant challenges or milestones that you faced while trying to launch this new entity?
No, it was simple. There were many. Anxiousness, there's apprehension, there are a lot of challenges, even just changing custodians. There's a big hassle factor.
Changing management personnel. Every time that you tried to give a task and a mission to someone and they were perhaps not up to that task, and you had to go to them and say, I'm replacing you. I mean, it's a heart-wrenching, difficult time, but it had to happen for the success of the firm.
And the whole wirehouse W-2 model is really different than the independent 1099 channel. So even for us to change mindsets, think more entrepreneurially, and just kind of change our focus, it took time. It took a full year or two to develop this, quite frankly.
And there were the occasional Well, there was one in particular day when someone said, "Hey, we're out of money and we're not going to make payroll." You don't forget that night.
Yeah, so we bootstrapped this, and it's really was almost felt like a tech startup along the way. The first few years were challenging at times in terms of personnel or maybe financially, but today it's running beautifully. It's profitable, and it's going to be a wonderful entity in the future for us. It's going to be a good investment as well.
So let me ask you guys this, regarding Cooke Financial Group, and thank you very much. I before the podcast, I was so I had so many questions. I was slightly confused, and I was telling my twin brother yesterday. He's one of the managing partners of Rise as well. And I was telling him, I go, yeah. I said, I think Ashley and I have a podcast with the gentleman that they were the founders of Sanctuary, and he goes and he said, well, I thought you said that they own a company called Cooke, and I said, I'll figure it out.
It's a little confusing.
So in growing Cooke, is Cooke like operate like Sanctuary does, or are your advisors more W-2'd and underneath the Cooke model there?
So within the Cooke model, I'd say we have Chris and Brian Cooke as partners, and then we have a tremendous team beneath us. However, we're actively in a succession planning process right now to bring in the next generation of partners, which will include non-family members. So it'll be an expansion, I think, and a growth of the Cooke Financial Group. But yes, many of the employees of the Cooke Financial Group right now are just that, W-2 employees of Cooke. So, think of the Cooke Financial Group as an independent RIA firm. Mm-hmm. We operate totally on our own. We own our own building. We own our own space, and Sanctuary provides us with a great number of services to help that run. But we own Cooke Financial Group. In the future, if we wanted to expand, and Brian mentioned this a little bit, we could bolt on another RIA into Cooke Financial Group. We can hire new employees, whether those new employees come in as independent parties or if they came in as W-2. We have so much flexibility in the independent channel. It's been wonderful. In fact, if there's a challenge of the independent channel, it might be there's too dang many choices.
Yeah. Narrow our focus.
Yeah.
Sometimes
you get a little wishy-washy because you're thinking about 5 different things and you never concentrate on the one that you need to close. So
yeah, I could tell you this. I am absolutely horrible at bifurcating my time. I'm really good at honing in and just doing one thing. I've never, I met this gentleman, maybe it was about 2 weeks ago, and he was like, "Oh, I go, oh, what do you do for a living?" He goes, "Yeah, I'm a fishing boat captain. I'm in the cannabis industry. I just opened up 3 ramen restaurants." And I was like, sitting there thinking in my head, I was like, "Oh, so you haven't found success in any of them."
True.
But he must have, and then he goes, "Oh, and I'm an ambassador for the government when it comes to my family's company." And so, needless to say, what I had found out about this guy was I believe it was his grandfather was the founder of Gatorade.
Okay.
And essentially, the money I believe it was the grandfather. And now it's 2 generations later, and the family's almost run out of that money. And so, they kind of handed him over one of the entities of the company before, where they still had owned, I think, 25% of Gatorade. And then he and his brother, they grew up with, tennis rackets and silver spoons and whatnot.
Sure.
And so essentially, it all made sense where he was trying to find his footing in life as, the cannabis, concierge service and fishing boat captain and all sorts of things. So, I get what you're saying. I'm like you guys. I got to put 90% of my effort into one thing there. So,
it's funny when you talk about putting 90% of your energy into something. When we determined that we were unhappy in the wirehouse, I don't know what percentage of our energy we put into the exploration of alternatives, but it had to be 20-30% of our time for a few years. And we were on a mission to figure out what was going to work best for us. And so that exploration, call it from 2006 to 2016, led to eventually what's now Sanctuary Wealth. Well, you could argue then that we put 50 or 60% of our time into running Sanctuary Wealth in 2016, 2017, 2018, 2019. Of course, we're still running Cooke Financial Group. I felt like I had 2 full-time jobs. You probably felt the same way. And that was challenging, but it was also exciting. It was new. But as soon as we got that management team and Sanctuary started to function, I got to admit, I was grateful to fall back and just run the Cooke Financial Group.
Yeah.
Because it's difficult to run multiple things and separate your mind space and
be good at both
and be good at it,
or multiple things.
So it's refreshing, I guess, today to be back to just trying to run Cooke Financial Group and let my Sanctuary team run Sanctuary. But within Cooke Financial Group, I think, okay, well, what's that next important thing? And that next important thing that's going to occupy 20% of our time is probably this succession planning.
Yeah.
And the broadening the scope and the breadth of our personnel and what we can accomplish. We think that this next 10-year period in the industry is going to be unbelievably amazing. And that the teams who are prepared for this next 10 years are going to have success beyond your wildest imagination. And those who are not prepared are going to get left behind very, very quickly. We think that that's technological change. And of course, we think it's that 20, 30% of the business of the financial advisors are going to turn over. The change in client relationships and advisors is going to be so fast and so broad. You're not going to be able to say, 20 new accounts came in, I'm ready. You're going to have 2 people trained and ready to go before those accounts come in. And I think we're trying really hard to focus on this next chapter of be ready for the next 10 years, be ready with our succession planning, be ready with our team, and capitalize on the changes that we believe are coming in this industry.
Can you elaborate on more of those changes that you think are going to be, making their headway in this industry?
Chris did a good talk on this at the Forbes conference about next gen and the big heavy movement of money. Give him a quick snippet of that.
As a for example, we're all aware. I'm 58 years old, and I believe the average age of
I thought he was 65.
Oh, yeah. I'm 58, and I believe the average age of a financial advisor in our industry is 55. So for all practical purposes, I'm average. Half the industry is older than me.
Yeah.
That's not good, guys. So if we just say half the industry is on the retirement track, that half the industry controls, we see estimates ranging from $55 trillion to $75 trillion, bunches and bunches of money.
Well, it's probably 80 or 85, maybe even 90% of the assets
in the industry. And then when this older generation retires and this money flows down to a younger generation, the boomers, if they said, I need a new financial advisor, they would have said to their friends, their neighbors, their family, who do you use? Would have been a referral. But when the millennials receive this inheritance, this money, and they go to look for a new financial advisor, how are they going to do this? And the answer is going to be a Google search. The next generation of successful teams are going to have a digital presence that's unlike anything you've ever known. And if your wirehouse or if your other entity doesn't facilitate you having a robust digital presence, then you're going to fall behind. And we want the Cooke Financial Group to have the most robust digital presence that we can imagine. And it's not that, hey, you're not looking at 2 guys who are really great with digital here. But if we see this coming, we're willing to hire people who know how to do digital. And we're willing to strategically position Sanctuary Wealth where we're going to advocate for and push digital. And we're going to help people market, whether that's through LinkedIn, YouTube, Instagram, you name it, we're going to figure it out and we're going to be there first. And when the rotation of money from old advisors to younger advisors and from boomers down to millennials, when this rotation of money happens, firms that are well positioned and have young, capable, quality advisors We think these firms are going to triple, quadruple, or quintuple in size, and we intend to be among the winners of that.
I mean, you get the whole digital opportunity. I mean, look at your podcast. What matters most? I mean, you're right in the heart of it. We actually took the time to vet and hire a full-time marketing digital media manager about a little over a year ago. So it's given us a better LinkedIn presence. We're doing videos. We're doing webinars. We're definitely more out there in the public digitally than we were a year and a half ago.
Another item we might add to that is it can't just be Chris Cooke or Brian Cooke. I need a digital presence for every single meaningful person here at the Cooke Financial Group. So there are, if you go to our website and look at it, there are digital presentations by every single one of our financial advisors, and even by some of our staff people when a pertinent item comes up. And we want the world broadly, right? Anybody on the digital world who Googles Cooke Financial to be able to get to know us, even if they've never come to the office, never met us in person. And so that digital presence is not just the founder or the leader, it is everyone. And we really believe that this next 10-year period is going to be the vanguard of digital marketing of your skill sets, your services. And again, I think the winners are going to triple, quadruple, quintuple in size. And an old friend of ours, a guy named Jamie Price, who's now the president of Osaic, I think Jamie said not too terribly long ago that the winners of this next 10 years will be 4 times larger than they are today. Yeah. I agree with him.
So you got to be ready to capture that.
Gosh, I couldn't agree more with everything you're saying. I feel like our last at least 5 podcast guests in a row highlighted the same thing, the importance of digital marketing right now and everything that there's these opportunities with social media and marketing in the digital way and how that's really going to be kind of the future of getting new clients.
And I think there's a lot of tension around that because you've got industry tensions. You don't want to run afoul of the regulators. And it's a strange new world. In fact, for many years, we were told we shouldn't even go here. And so now you're treading gently into this strange new world, but you've got to be successful at it to really capture the future. I mean, that's an interesting setup. If you think of it that way, that's where we are.
Right.
I mean, if you even look at the room we're in, we call this our Zoom room. Some of this spurred on because of COVID, but it also spurred on because we wanted to be able to do client meetings from afar. We've got clients in 28 states. That was one reason, but we wanted to be able to have a great digital presence and have a full media room that looks and feels like a media room. And we have great branding too, as you see, even in our logos. It's good swag to wear with a colorful bowl on your chest versus a cursive Cooke.
I really like that.
I do like the colorful bowl.
We also, we fail sometimes to explain the meaning of the bowl. We really should explain it. Every one of the every color in the bowl stands for one of our keywords.
It actually represents all of our core values. So things like dark blue is integrity, red is passion, orange is excellence, green is wisdom, light blue is independence, and then we have
yellow community,
and pink for diversity. And these are core values that our team and we all live by. And it's been fun to have this logo have a little more meaning than just a kind of a pretty picture.
That's really cool. My twin brother, we had our company logo was the pink unicorn, and we had pink unicorn tracksuits, and every Thursday was Tracksuit Thursday.
It's fun.
And we had more pink unicorn paraphernalia, I think, than one would care to have, right? So what I can tell you there, Darius, who's my business partner as well, and twin brother, he wrote a book called The Core Value Equation. So I'll put it to you like this: core values isn't something that I would have came up with on my own. I'm happy to see that you guys have adapted to it. They've been forced upon me, but what's funny is, we were talking to a firm about a week ago, and they were talking about their core values, and I'd love to hear how you guys just rattled those off, right? And Darius goes to them, and it was to one of the managing partners. He goes, well, what are your guys' core values? Can you say them to me? And the guy goes, yeah, absolutely. The guy knew probably 4 of the 6 of them, and not even by heart, right? And so, when it comes to that, how do you expect your employees to know them, and your teammates to know them, I should say, if you don't know them by heart, right?
Well, I think you're absolutely right. But let's face it, we're human, and memories are challenged sometimes. Yeah. And when you have, 8 core values or 7 core values, and you're trying to remember them at that moment, sometimes it's hard to come up with more than 4. But I tell you, it helps a lot to have that colorful bowl and think, okay, I got to go through the colors. And then they all come back. It makes it a little easier. And if you could see it,
one word. They should be. I like how you guys say they, one color, one word, right? When you go to these, paragraphs of what they're about, I think that's when you start throwing people off.
I agree.
Yeah.
But you should also, we can't show it to you from this room, but there is a 5-foot tall version of this bull on the wall out in the main workspace.
3D.
And underneath it is each one of the keywords in the proper color. Yeah. So everybody sees it all day long, every day. It's just part of the culture.
Branding's important. I love the pink unicorn idea.
I do too.
It's fun to be a part of that. It creates great culture for your team too. So we do things around the bull, whether it's swag or a deck of cards that has the bull on it, hats, T-shirts, and everybody on the team loves it.
Really cool.
Very cool.
There's a funny backstory behind that. So Brian and I bought this building, and we were building it out during COVID for the new office. And there was a big concrete block wall on the back of the building on a patio. And we said to Brian's daughter, Anna, who's a graphic design person, we need a mural on that wall. And her first drawing was, no kidding, a bear.
No, it can't be a bear.
Oh no, let's make that a bull. Let's just change that. And the bull became, the logo, if you will, because it was the mural. And we liked the mural so much, we just turned it into.
Yeah, the mural's probably 20 feet by 15 feet back there. At midnight, they shined a projector up on the side of the building and painted it off some scaffolding, and it was great. All the kids helped, actually. Chris's kids helped, and Anna laid it out. So it's kind of fun. It's on our back patio. It's our beer garden.
Oh, so fun.
Really cool.
But I thought you'd like this story that, no, it started out as a bear. No.
So, what I wanted to ask you guys there, what do you think is on the future for Cooke Financial? Where do you guys see yourself in 5 years from now?
I'll start with this too. Chris should be really proud of this, and I am too. Chris has 2 children that have joined Cooke Financial Group. Both had great backgrounds at Morgan Stanley. So my niece and my nephew, Claire and John, have joined us permanently, and that's our first 3rd generations to join CFG. Obviously our mom and dad started the firm back in 55 years ago, back in 1969. So we're just developing this whole 3rd generation. We also have a really key partner, our Chief Operating Officer, Tammy Williams, kind of leads our culture, leads our full team. And I would kind of view her today as kind of John and Claire's boss and mentor. And so we're really developing that layer, which we think is going to be key to our success in Cooke Financial Group going another 55 years.
I think that, again, to come back to this vision of this next 10 years is critically important in the industry. It's not about the Cookes, it's about the industry. And if you're going to adapt to these changes, number one, I think you have to have 2 to 3 people ahead of what you need for today. You can't say, oh my God, we've got a huge amount of opportunity. Let's grow 2 people immediately. You have to say, let's grow 2 people now to be ready for the opportunity in 2 years. And so I think we're trying to work ahead to be prepared. That's number one. Number 2, this idea of mergers and acquisitions and the changes in the industry. There are a lot of great firms out there that are probably headed by one of these older financial advisors that's not certain how they're going to do succession planning. Maybe they have, as an older advisor, 1 or 2 younger people that they want to take good care of. Well, perhaps the way is to fold that into a Cooke Financial Group where everybody can continue to manage those client accounts and have a relationship. It doesn't have to be a traditional buyout where we buy the whole firm. It might just be hey, join us and we'll find an accommodation to make that work. I think we're going to need some very interesting and flexible M&A for the next 10-year period to help facilitate the transitions from this older generation of advisors to a younger generation of advisors, some of whom probably aren't ready to run the place. They probably have great relationships with clients, but maybe they're not ready yet to run a firm. Well, by folding it in with a Cooke Financial Group that has all these operational capabilities, all the infrastructure, it'll make it a lot easier. So I think that M&A, I think that being a couple of employees, 3 employees ahead of what you think you need, all these little steps are going to be crucial to our next 5-year and then 10-year plan. And then finally, I think succession planning. It was an easy succession plan when our father gave the business over to the 2 of us because he has 2 sons and we were both here. Mm-hmm. Succession planning isn't necessarily so straightforward if all the kids aren't here or if you want non-family members. It becomes a little more business-like, I think is a good word. And we're trying to be more business-like in how we're approaching this next step. And it's a big part of what we're doing today.
Thank you.
Yeah. And so you mentioned some things about, M&A and planning for the future with hiring, 2 to 3 employees more than what you need right now to plan for that future. Now, can you elaborate on any other additional ongoing trends, technologies, or strategies that you really think are going to shape those next 10 years that you're hiring for right now to prepare for that?
I might mention technology. We're doing a few things around technology to make us more efficient, I would say. We're getting ready to change our CRM to a new provider. We've been on ACT for 20 years. We have just detailed, thorough notes in that system for forever, and it's about to break down. So we're changing our CRM. We're doing some vetting on a couple different AI softwares to see how we can be more efficient operationally.
And we're impressed by what we're learning. Yeah, I don't know that we're 100% ready to adopt it, but we are 100% certain that it will be useful and something will be adopted. For sure. It's coming quickly. And if you're not investigating it, you're going to fall behind.
Yeah.
Right.
And we try to be life coaches, I guess, to our clients. We tend to make them part of the family. We view this as a family practice. And if you're a client of the Cooke Group, you become part of the family. Mm-hmm. And we treat you like that. Chris and I have always said there's more hugs in here than there are handshakes by design. I mean, we really get to know people from everything about what's important to them, legacy planning, philanthropic planning, and what really matters to them on with their children and the community, et cetera. I think a lot of advisors do that, but we really take that to heart. I know that was a little off topic of where you were headed with, but
I think you're right when you say evaluate the future. What tools are coming? I do think that automation is the key word, and somewhere buried in that word automation is artificial intelligence. Mm-hmm. I mean, all those mundane tasks that many of us have learned to do in our lifetimes, the artificial intelligence robot or computer or whatever it is going to do it maybe better than we've ever done it. If those mundane tasks are taken away from us, how do we become more proficient at the things that artificial intelligence can't do? The decision-making, the thought, the evaluation of feelings. Mm-hmm. I believe that artificial intelligence is going to free us to be a better version of what we think we are today. And I don't think it's a bad thing at all. I think it actually gives us more time and more opportunity to do more of the things that make people happy.
Well, even things like our financial planning software, we're currently using e-money often, and just the aggregation of that, of pulling in assets from their 401k, their bank statements, and everything in one location is really helpful for us in terms of asset allocation analysis and making better decisions for the client when they've got maybe multiple advisors and we're trying to connect a CPA and the attorney, and we can put it all in a vault and share those documents. So it's all part of AI in a way, but the financial planning software is so much better today than it was 10 years ago as well. So that's really helpful.
Yeah, I think it's definitely making significant strides in regardless of if it's just something as little as, being able to summarize meeting notes so you're not having to
That's right.
write them down.
We can
to be more
dictate. Yeah, I can just
present.
dictate those notes today. Yeah, it's so nice.
It makes
You know,
everyone's lives a little bit easier.
one other thought comes to my mind when I think about what tools of the future, and it's just the word communication. When clients are unhappy with their advisor, it is 99% of the time a communication gap, right? That's been written about 1,000 times. I don't think that's any different today than it was 20, 30 years ago. 20 years ago, my dad had to pick up the phone and call somebody. Today, I email somebody or, however we reach them. How is that going to happen tomorrow? And it's going to change. But the ability to communicate quickly, clearly, frequently, and on point, you better understand how to do that. And if you need technology or tools to help you do that, you better invest in those tools. And good communication will, again, be one of those differentiators that separates the ones who go up 4 to 5 times in value and assets under management versus those who fall behind. But technology is moving, frankly, so much faster than I think most of us can keep up with. And so, how do you win? How do you keep up? You're going to have help. You're going to have to employ the right people, and you're going to have to be willing to try new things and change. And if you do all these things, then it ties right back to, I think, where we started with digital marketing. It's this digital integration. You've got a digital presence. Someone finds you through your digital presence, and then you communicate back through these digital means. And that whole mechanism is getting better, healthier, more interesting if you do it right. But every one of those steps is fraught with danger. It could become stiff, or it could become impersonal, or it could become, I don't know. But it's going to be a fun time.
I could tell you this. So several, Ashley and I, as she has told you, we've been working together for almost 8 years now. And our team, even, when I sold my last company, Ashley and I didn't work with each other from about 2020 to 2023, right? And the team that we work with now is myself, Ashley, and we have, one other assistant that's outsourced in the Philippines. And before, it was Ashley, myself, 3 other people, and then 2 VAs in the Philippines. I would say that our smaller team right now, we get 2 to 3 times the amount of work done as we did 3.5 years ago.
Not funny.
Fantastic example.
Yeah.
Fantastic.
Actually, we should edit that part, but I will say, and also, but seriously, and it creates for so many less moving parts. And I mean, just how many times on a daily basis we use artificial intelligence,
Totally.
Yeah.
I think, and I say this as a digital dinosaur, I'm not ashamed of saying that. I still go to my kids every day and say, I can't open this attachment on my phone.
You're speaking to my kids, nothing to worry about.
Yeah, and the kids are like, you idiot, here's all you got to do. And I'm like, I didn't know. So anyway, if I think of myself as a digital dinosaur, but I can recognize how important it is, now then I've got to find the right people, the right interface to make me not a dinosaur, make me effective.
Either we hire that or we outsource that and find software, what have you, but we're embracing that.
But I think that's the future right there. And so I would say we've hit really important things. Number one, at this very high level, you've got 1/3 of the industry retiring, maybe more. Number two, you've got this transition of assets and transition of client relationships to this millennial generation. They're different. Number 3, you've got fintech, just whether that's AI, whether that's communications, or, who knows, but fintech is changing. You put all this stuff together, and I think this melee this is the opportunity. This is the change. There's never been a 10-year period like this, I don't think, in our industry. And there will be big winners and there will be big losers.
Mm-hmm.
We're also trying to be very intentional on who we hire. We've come up with like kind of a blank org chart and said, these are the people, or these are the positions that we'd like to fill, the roles and responsibilities of those positions. And instead of hiring someone that looks like Brian or looks like Chris and has a similar work ethic, we might be thinking outside the box today and saying, we need that creative individual to be thinking a little differently than us and add some diversity to our whole practice, because that might be a key cog in our whole org chart that we don't have today. So it's been kind of a fun process. We're just starting to go through that as well, part of our succession planning and this whole org chart and filling some seats with different types of people.
We don't want anyone else like Brian. We got enough.
Yeah, I think, the most successful people are too the people who surround themselves with people who are better at the things that you're not good at. Like
No doubt.
Fill in those inefficiency holes there. So shifting gears a bit, this question can go to either one of you, but are there any exciting investments or sectors that you find promising right now for the future of wealth creation?
Well, we're not going to pin you on this, by the way. By the time the podcast airs, if anything changes in the sector, just let us know.
True.
I think that the world is not that different. The theme of today may change, but what do you look for in investments broadly? I want a high quality, needed service or product that doesn't go away, that may have pricing power. I think there's amazing numbers of those out there. Now, in this marketplace, perhaps, NVIDIA and the Magnificent Seven are the only ones being talked about, but there are many hundreds more quality companies, quality services, quality products that are valuable. And I think investments still have a broad opportunity for success, not a narrow opportunity for success. If you think about the world at large, and again, I'm going to bring it back to AI. I do believe that AI might be the next productivity revolution. Mike, you mentioned it. With 3 people, you might be more productive today than you were with 6 people some short time ago. What does that mean for us all when we incorporate AI? I don't know, but if productivity could go up 10, 15, 30%, then corporate profits can go up 10, 20, 30, 40%. We might be at the heyday of the equivalent of the Industrial Revolution. I think computers have been remarkable during my lifetime, but that smartphone in 2006 or 7, whenever it started, that's changed my life. Is artificial intelligence going to be that on steroids? I don't know. But I think that people who try and pinpoint one sector or one segment of the economy, I think you're making a bad mistake. I think that the economy is broadening out with these new tools, and there are many, many, many things that are going to be hugely successful.
More productive.
And so keep your eyes open for how what seems like AI is a unique subset today, but keep your eyes open for how that subset broadens out into everything. And the everything might be where the real money is made. And our clients, I think we do a great job of keeping our clients focused on long-term trends, not short-term. We fully agree that we have no idea what the short-term holds. I wish we did, but we don't. And so if we focus on the long-term, we generally get it pretty right, and that's enough to be really successful. And I think our clients are very comfortable with that premise. But I love high quality. I love pricing power. I love, cutting edge management teams. No different than our industry and all the things we just talked about.
And Ashley, you and I spoke about this, I think, on our prep call. We tend not to pick individual equities or necessarily individual sectors. Our whole practice is consultative, where we hire the best third-party money managers throughout the world. We might index certain parts of a portfolio and then use outside active management for others. So we tend to let our managers pick thematic sectors, and then we grade them on that. And we tend to gravitate to those where we might we might have a edge, or we might see a theme like this AI, which we are embracing a little bit, but tend to be more third-party asset management and more consultative in general. The one thing I will say that we're doing a little more of maybe in general would be private investments, alternatives. It seems like over the last 4 or 5 years, an institutional product that was private and only accessible with a $10 million minimum has come down in scale and allowed us to show it to high net worth retail. And so we're doing a lot more in interval funds in private real estate, private equity, private credit. Those are new products, I'd say over the last 4 or 5 years that we've introduced into our asset mix that I think is appropriate. It helps risk mitigate, and it's been a real benefit for some clients.
Well, thank you. Thank you for sharing that. I think that's very insightful. And,
lastly, I wanted to, delve into this is my favorite question out of every podcast that we have. So much has gone on in this world, right? Our economy, the 10-year treasury, me being a 26-year veteran in the mortgage space, that's where I met Ashley. I remember, we had 1.75% 30-year fixed rates, right? Mm-hmm. Now, obviously, and most people were taking 2.75, right? You take a look at everything, the 10-year treasury is up at, in the mid fours. We've doubled our deficit there. What's your outlook on this economy? Where do you think what do you think this looks like in 10 years? And where do you think this takes our industry?
You're our technical analyst, our visionary. Why don't you touch on
it? I'll tell you what, it's easy to be dour. I'm a CPA first, and amazingly, I was taught that books are supposed to balance. It's still strange to me when the federal deficit is a couple $1 trillion a year and the debt continues to grow and doesn't feel like anybody cares that much. The CPA in me says that can't go on, and so that's nerve-wracking. But underneath that, what's hard to conceive of, I think, is our economy is so big and so strong. And again, the opportunity for some of these tools to be so productive into the future, we may be able to absorb that debt. We may be able, I don't know. I don't think it's an easy process. I don't ever think it's a straightforward process, but I would never undersell a free market economy's ability to overcome. And so I am concerned. I actually think that it would be a devastating and horrible blow for the U.S. dollar to no longer be the world's reserve currency. And I think we run the risk at some point of damaging that. So if I had one thought I could float to our elected representatives in Washington, it'd be try to balance the budget, or at least get close to it, and make that a priority. But doesn't feel like that's a priority today, does it? Within that, great companies and great products are going to be needed under any circumstance. Yeah. And I think there are still great investments under any circumstance. In fact, this discussion of debt, the discussion of interest rates, the discussion of all these things, the real risk in most of those is fixed income, not a quality equity. Mm-hmm. I think sometimes we forget to explain the difference between short-term risk and long-term risk, right? In the short term, my fixed income instruments are never going to go down very much. But over the longer term, if I lose 10, 20, 30% of my purchasing power, it's a devastating blow. And so I've got to really balance these things when I talk to clients and we. And I think that we as an industry have a duty to educate ourselves and then to share that education, share that knowledge with clients. Risk is a multifaceted word. Risk means different things at different times in different ways. And I think sometimes we talk about risk like it's one-dimensional. Risk as it goes down. I don't know that that's not the only risk. And we better be careful how we talk to clients in this future world.
Yeah, couple education. Yeah, sorry, Mike. Couple educational items. We've got we do these webinars about once a month. We call them in the bullpen sessions. And we've got one coming up on Bitcoin. So we're going to talk cryptocurrency and Bitcoin. And then we've got one on how to invest in an election year. And that's always an interesting topic. We don't think it really matters too much. If you're buying good companies, they'll provide a good result, and client portfolios will go up over time. And it really doesn't matter about the election, but that'll be an interesting topic that we've got a lot of people signed up for. So I'll include you on those. You're welcome to listen to them.
Yeah, thank you. That'd be fantastic. Yeah. Well, I think that concludes all of our questions for today's episode. Thank you both for joining us and sharing your insights and experiences with us today. It's been incredibly enlightening and fascinating to hear about your guys' journey with Cooke Financial and Sanctuary Wealth. So thank you so much, Brian and Chris, for joining us.
Thanks for having us.
Yeah, Ashley, Mike, thanks a ton.
Appreciate it.
Thanks for all your success.
Thanks. And to our listeners, thanks for tuning in to another episode of the What Matters podcast. Stay tuned for more intriguing discussions in our upcoming episodes. Until next time, take care.